All right, welcome. Today, we're diving headfirst into one of the most misunderstood, yet absolutely critical, concepts in all of trading, market liquidity. And I'm telling you, what we're about to unpack here could totally change the way you look at a chart forever.
So let me just start by asking you a question, point blank. Are you the fuel for the market? Now, I know that sounds a little intense, but stick with me here, because whether you are or you aren't really comes down to how well you understand what we're about to cover. Because here's the deal, here are the stakes. If you don't really get how liquidity functions, you're not actually a participant, you're more like a resource. You end up being the one providing the liquidity that the bigger players need, and guess where that comes from? Yeah, right out of your trading account.
Okay, so first things first, let's start by absolutely shattering the biggest, most common, and honestly the most expensive myth about what liquidity even is. This right here, this flips the script on what most traders are taught. We hear all the time that liquidity is like a magnet, right? A destination that price is just drawn to. But the reality is so much more interesting than that. Liquidity isn't the destination, it's the fuel. The market's true destination is always value, and liquidity is just the gas it needs to burn to get there.
And I love this quote because it just nails the concept perfectly. Think about it. A swimmer is already in the water. It's the medium that lets him move. He doesn't swim to the water. It's the same thing here. Big institutions, smart money, they aren't trading to liquidity, they're trading through it to push price to where they believe fair value is.
Okay, so if it's the fuel and not the finish line, what is it really? Let's get a super clear, useful definition down so we're all on the same page.
Here we go. At its very core, liquidity is just a measure of market efficiency. High liquidity means you can place huge orders without really budging the price. Low liquidity, man, even a small order can send the price flying. But the key thing I want you to burn into your brain is this. It's a quality of the market, a condition. It is not some magic spot on your chart.
All right, let's look under the hood. This is the engine room of the market. Price doesn't just float around randomly. First, you've got all these passive limit orders just sitting there waiting on the books. Then, bam, aggressive market orders come flying in. They attack and consume those waiting limit orders. Once all the orders at one price level are completely eaten up, the price has no other choice but to tick up or down to find the next batch of orders. That's it. That's how price moves. Aggression eats passivity.
And now we get to the really good stuff, the secret. Because you see, not all liquidity is created equal. There is one very specific type that is basically the high-octane rocket fuel for smart money, and understanding this is a total game changer.
You know, liquidity isn't just one thing. You've got your active market orders, your passive limit orders, big pools of institutional cash, and of course, retail orders. But the one we are zeroing in on, the one that so many of these smart money concepts are built around, is this last one, latent liquidity.
So what does latent even mean? It just means hidden or dormant. This type of liquidity isn't actually visible on the order book, yet. It's made up of all those stop-loss orders that we as retail traders tend to place in really predictable spots, right? Just above a key high, just below a key low. And when the price finally touches those levels, all those stops instantly trigger as aggressive market orders, creating this sudden burst of fuel that institutions can use to fill their massive positions.
So, how does this actually play out on the chart? Let's take a look at how this predictable retail behavior basically becomes the playbook for institutional traders.
I want you to think of the market map in two ways. First, you have liquidity pools. Picture these as deep pools of water. They're packed with all those stop orders. This is where institutions can get in or out of huge positions without making a big splash. Then you have liquidity voids. This is like thin air. There are hardly any orders in these areas, so price can just slice right through them, fast and easy. Smart money uses the pools to get filled, and they use the voids to travel.
And this quote, oh man, this just perfectly captures the whole strategy. It's completely backward from how a retail trader thinks. When price breaks a major low, every retail instinct is screaming sell. But institutions? They see that wave of sell-stop orders as the perfect opportunity, the perfect fuel to fill their giant buy orders. They are literally buying from everyone who is being forced to sell at the worst possible time.
Now, it's so easy to just stop there and see this as a simple battle, smart money versus retail. But for our last section, let's go a bit deeper, because the reality of the market is so much more complex and fascinating.
So this is the natural conclusion, right? If smart money is hunting retail stops, then it's all just manipulation. It's all rigged. But is that the whole story?
And the answer is a resounding no. It's not that simple. The market is this huge, multi-layered arena with tons of different players who all have different goals. That sharp move or false breakout you just saw, it might not be a stop on at all. It could just be what's called a failed auction, a simple lack of buyers above a certain price. Or maybe it was a giant pension fund rebalancing its portfolio, or a commercial hedger using the market like an insurance policy. These guys aren't speculating. They're managing risk on a colossal scale, and their actions leave massive footprints on the chart.
And this brings us right to our final, most powerful idea. The price chart that you stare at every day, it's just the tip of the iceberg. It shows you the effect, but it completely hides the cause. It shows you the price, but it tells you nothing about the purpose. Understanding liquidity is your first real step to looking below the surface and starting to understand the why behind the price.